Hello everyone, my name is Keshav, and welcome to the Buckner Project's series on financial literacy videos. Today, I'm going to talk about a very important topic, taxes. As you grow up and earn money, you'll find that there's no escaping paying taxes. As Benjamin Franklin once said, in this world, nothing is certain except death and taxes. Here are some examples of public services that we need as a society. Think a little bit about how we pay for them. How are schools and parks built? Who's responsible for building and maintaining roads? Who is responsible for paying the policemen and firemen who protect us? Who pays the workers that build roads? Who pays garbage collectors that help pick up our garbage? Who pays ambulance drivers that help us when we're hurt or sick? Who pays pensions to the elderly so that we can survive once we no longer work? The short answer is you are. That is, once you become old enough to pay taxes. Taxes are ways that a government can collect money from its citizens to pay for things that are collectively needed as a society. Collectively means that they're needed as a whole. It's a shared responsibility. While people complain about paying taxes, there's a lot of good that comes out of it. Taxes pay for all sorts of things like services and jobs from the government. Federal taxes help pay for national things like the president, the Congress, federal judges, and the military. State taxes pay for the roads that we drive on. Country and city taxes help pay for schools, fire trucks, and the police, things that we'd interact with in day-to-day life. Funding for certain things is a little complicated, and for something like a road that goes through a major city but is an interstate, you might see funding from both federal, state, and city levels. Without taxes, the government couldn't run and the country would be in chaos. There are several different kinds of taxes which we will discuss next. Both people, or individuals, and companies, called corporate entities, have to pay taxes. Income taxes are a percentage of the money someone earns from their job. The more you make, the higher percentage you pay. There are different types of income tax, including federal, state, and local income taxes, which we talked a little bit about what they pay for in the last slide. Federal rates can be anywhere from 0% to 39.6%, and state rates run from 0% to 13.3%. In the United States, we have what's called a progressive income tax, which means the more wealthy you are, the more you have to pay. If you own property, like a house, then you most likely will have to pay property taxes. Property tax is usually a percentage of the current value of the house. If you own $250,000 for a house, and the tax is 3%, then each year you'll have to pay the government $7,500 in taxes. A sales tax is placed on all items that you buy from a retail store. Sometimes, items like food or clothing are exempt from a sales tax. Every time you buy something at a store, and they add on the tax at the end, that's the sales tax. Sales taxes vary depending on the state, and they vary from 1% to 10%. Another tax that comes out of someone's personal paycheck is a Social Security tax. The tax is meant to help people when they retire. Once you get old enough, you can start collecting a Social Security check. The current tax rate is 6.2%, and that's paid by the employee. And there's another 6.2% paid by the employer. If you have your own business, you'll have to pay double that amount, which comes out to 12.4%. because you're both the employee and the employer. Medicare tax comes out of your own paycheck too. It pays to help people over the age of 65 and people who are sick and need medical care. Medicare tax rates are 1.45% for employees, or 2.35% if you make a lot of money. Businesses also have to pay for all sorts of business taxes depending on how much profit they make. Profit is the total amount of money a business makes in a year minus what their costs are. For example, a restaurant's profit would be the money that they make from people buying their food minus the amount of money they paid to buy things like vegetables, meat, and other things that would go into making their cuisine. There are a lot of other taxes, such as tariffs on imports, gift taxes, estate taxes, and employment taxes, but the ones I mentioned above are the main ones. The use of taxes has been around for centuries, dating back to the first human civilizations. If you read about ancient civilizations, you might have come across Mesopotamia, which is called the land between rivers, which was in present-day Iraq. Taxes were paid in the form of goods or animals, because back then, most people were farmers. Before we wrap up this lesson, let's touch on lotteries a little bit, which is one of the ways for the government to raise money without adding new taxes in a very creative way. A lottery is kind of a form of gambling in which a large number of people buy lottery tickets in the hope of winning one or more prizes. What differentiates a lottery from a tax is that no one's forced to pay. Wherever lotteries are offered, however, they have proved quite popular. Did you know that in Australia, a lottery financed the building of the iconic Sydney Opera House, which you might have come across in the news or on postcards? As always, thanks for tuning in to this week's video from the Buckner Project's series on financial literacy videos. We hope you had fun and stay learning.